What's good, y'all? It's your boy B Phil back again. We're gonna go ahead and go over the trade review for 11/4/22. Let's jump right into it. So, what we had on 11/4 was a loss, unfortunately, but really not unfortunately. I love my losses, right? Because the losses are gonna go ahead and validate everything that you got going on. So, let me get this snipper snip. And let's check out what we were looking at here. All right. So, as you can see, we had a slight risk. Now, I have this 200 moving average up right here for the simple fact that I just want to go ahead and see what it's giving me after the fact. This is not what I'm actually using for the trade, as I've mentioned before in my videos, but this is actually something just after the fact to get an idea of how it lines up with how I'm seeing the market currently. So as you can see, we had the double MB entry, right? So we had price come up into this zone here. We saw it close, and I mean, to be quite frank, it looks like what I was looking at was a very risk entry, right? At the time, I was looking forward to break these lows here. When I say these lows here, let me go ahead and highlight what I'm talking about. Yo, these lows right here. Uh-oh. You see how when I bring up, man, hold on. All right. Yeah. Yeah, so that's what we're looking for. And when you start to actually really look at it, right, we had the first break and we were looking for the second. So we had break one, break two. All right, so we were looking for MB2 here, it looks like, which hindsight looks like it was quite risk, quite risk. Yeah. So, right, this is what I was probably looking at, MB1. And then we started to see it come down here. And then we were like, okay, well, MB2. Sell stop. And we kept moving the stop up based on these particular highs here. Right? These highs here. And then we had it tap us into the actual move. And as we can see, it actually went up against us and we got the loss. And that was pretty much that. So now that we're looking at it, it actually went quite higher. Went pretty good amount above where we were actually looking forward to go with this supply zone. Yeah. That's interesting. Okay, so that was the L that we took on Friday, which was farm pay or payroll. Farm, it was something. It had something to do with non-farm payroll. Let's close that before I got too much stuff open. Let's go to my FX book. Look at the calendar. Let's get an idea. So we can go ahead and select the calendar. And you know me. Okay, so right here, 789. Let's go back to the 4th. Uh-oh. Supply. All Souls Day. Friday, November 4th. We should have had unemployment rates and the non-farm payroll. So let's just take a look at this real quick. You know, because it's always good to become a bit more educated in everything. Oh, it's Canada. Of course it's Canada. Unemployment rates high. High impact news, right? At 3.7%. It's worse than actually expected. We thought it was going to be 3.6. It's 2 basis points higher. I think that's what they would say, right? 0.2, which would be 20 basis points. Yeah, this is interesting. So we had almost year over year last December, we had a 4.2, and we started to see unemployment rates dropping. Now we're starting to see them slowly start to creep up. The employment rate in the United States is a measure of the number of persons who are actively seeking work as a percentage of the total labor force in the country. A higher than expected figure should be seen as negative, bearish, for the USD, while lower expected figures should be seen as positive, bullish for the USD. So they get this from the U.S. Bureau of Labor Statistics, and as you can see, it's just been slowly dropping over time. So let's go over the 5-year. Yeah, so if we look at 2020, wow, it was as high as 13%, and it's been steadily on the decline. Sorry about that, y'all. I didn't mean to sneeze in your ear. Let's go max. Yeah, so it looks like when the pandemic hit, or middle of the pandemic, you had the highest unemployment rate, which made sense. We had people, or that, I guess the highest of how many people were actively seeking employment at this particular point. Then looks like we had it slowly creeping down since 13. Looks like this data is there. Yeah, so I mean, it looks like right now we're at pretty normal levels, but also we got to think about the other factors that come into play here, and obviously that's related to what the cost of living actually is at this point. So I mean, very low amount of people actively looking for numbers, right? Negative, bearish. If it's higher, lower than expected should be positive. So that's interesting. So let's go ahead and move over to the non-farm payroll. All right, United States non-farm payroll, a monthly employment report produced on the first Friday every month. Non-farm payroll have significant impact on the value of the U.S. dollar, the bond market, and the stock market. As per the Bureau of Labor Statistics, the Current Employment Statistics Program conducts surveys of approximately 141,000 businesses and government agencies, which represent approximately 486,000 individual work sites, in order to provide detailed industry data on employment, hours, and earnings of workers on non-farm payroll. So what would be interesting is for everyone who doesn't know, we definitely would want to know what it means non-farm. So I guess that means all payrolls, including everything everything not including farm, or anyone who works on a farm. On the measure of number of workers in the U.S., excluding farm workers and workers in a handful of other job classifications. So it does include workers in a handful of other job classifications. And I mean, it's just been quite steady. Been quite steady at whatever this is. I mean, 315K, whatever that number means. We're going to learn about finance today, y'all. We traders, but this is interesting stuff to look at too. Now, is this going to affect any of our trading decisions? Personally, not me. It's going to affect whether I'm in the market or not, or whether I should expect a higher amount of volatility. What do I mean by higher amount of volatility? So when I'm talking about that, you see this move right here, this large candle, and then you see it keeps moving up. All right, so let's go to the hourly so you can have a better idea of what this looks like. So look at this candle right here, right? That would be considered a pretty good amount of volatility, right? Because in one move, it moved up, what is that? Almost 19 bucks, right? In one move. Then you got to say, like, what are these average sideways moves, right? And then you look at this move right here, right? That moved up $24. Right? This moved up 19. And by the way, FYI, if you weren't seeing this already, You see this number right here, 24, 1.5%. Just so you know these TradingView tools, if you ever hop on TradingView, you know, right here. Uh-oh, disappeared, poof. So anyways, that was my one trade for Friday. Let's go ahead and look at the NASDAQ and see what happened there. So it looked like it started to, I didn't really even reject it. It just kind of tore through it and went down, and then it started moving back up. There's a large wick down. There's a lot of points. And these are points versus dollar versus cents versus all these other metrics, right? Wow, this was effectively a 238 point move. That's interesting. It was very large, and that happened on Friday at 6 a.m. So we're well below the 200 moving average here, and we came close to the zone. Didn't quite tap in. We started seeing some bottoms being put in, and we could say that after the fact, right? And this is on the 1 hour time frame. We had some nice bullish divergence forming, right? You see here, some nice bullish divergence, y'all. Now, would you have taken a trade here? Ooh, I mean, we're waiting for the 6 a.m. right here, and there was probably a new symbol somewhere here on Friday, and then it just spiked down and liquidated all those positions to actually bounce back up. And there was really no indication that you could take an entry right there. But you still do continue to see. So this would have been an inevitable loss. Inevitable. So there you go. We were seeing that, and I mean, we still see we're pretty far below. So this is where patience comes into play. Are we going to ultimately wait until it comes and taps into this demand zone down here? Now, when I say that, this demand zone here, this large area that I've highlighted, right? You see this demand zone. So the optimal play would be to go ahead and wait till it taps in there, right? Because we're saying that this is a structure, and we're saying this is demand. So we want to see our confirmation happen inside of that demand zone in and of itself, y'all. So nothing happened there on Friday for me. Let's go ahead and move over to GBPJPY, or GJ for short. All right, so let's go ahead and check this out, y'all. Looks like price is starting to cross over on the 200. Now, I had this zone here. Looks like you had a slight play off on some lower time frame here, right? You could probably say you could have got a nice 1-to-1 in there somewhere. That was a pretty bad gap, pretty big gap. Yeah, let's go ahead and zoom in a bit and see what it's working with. Yeah, we have price breaking up, price break down, double NB entry right here, right? Break down, pulls back. I guess technically something like that. And yeah, you have a nice little 1-to-1. Small little move in there on the 5-minute time frame. And you start to look again on a lower time frame. Man, a currency had a gap down. This is fascinating. So you had a break above, NB1, NB2, stopped out, all right, break above. Oof. Yeah, that one's tough. This one's really tough. This one would have been an L if you're looking at it on the 1 minute for an entry. Assuming you're saying, right, this is structure, right? If you're saying this here, structure, we see this first break, pulls back, break again, right? Sell stop the low, stop above the high, and we would have got stopped out up here. And then you have start to move, but ultimately there's really no additional entry after this move on the 1 minute time frame. Now we could continue to go pretty micro here if we wanted to, right? We go 15 seconds. Let's go ahead and reset our chart. And we're just going to go ahead and observe what's going on yet again, right? So if we're looking at the 15-second time frame, we're seeing let's go ahead and remove these drawings so we have a clear picture of what we're actually seeing going on here. Boom. So we're seeing price start to move here, right? We're up in the zone, breaks down, comes back up, right? We're tracing it, breaks down, breaks up again. So now this is our low, right? Comes down, wicks up. So do we consider this? And this is where you want to have your rules laid out. My rules, it depends on how I'm feeling, which I need to go ahead and filter that out. This is trading. You shouldn't have rules based on how you're feeling, but ultimately it's something to consider. But then you see a hard breakdown here. Very, very hard breakdown. You see where to come from, somewhere up in here, right? We see it pull back. Right, we see the breakdown in B1. Do we sell stop this now? Here? And this is pretty much what I'm talking about. You see? And there we go. You know, you don't have a win here. You have an absolute loss, unfortunately. But not really unfortunately, right? Because you got to take losses in this game. So then now we're just watching price again, right? Break. We're stopped out. Comes up again. Breaks down, right? In B1. Now we're looking for a sell stop. In B2. All right. We're going to sell stop this. So then if you make that play there, then yeah. Now you catch the gap down. All right, let's go ahead and cancel this. Let's go to the 1 minute. And there we go. There's our particular play there. And this is what you'll be looking at right here. Oh no, whoops, my bad. Not that one. It's actually this one. Right next to it. So you take one loss and then you potentially get this win. Right? It runs for 1 to 11. So maybe if you had a rule, I take 1 to 5 only all the time, and you're willing to take these losses on the 15-second time frame, then there you go. There's your next entry. Now, of course, this is a higher time frame entry where you get a 1 to 3, where the stop is a lot wider. But that's something to actually consider there in that zone, because we're in the zone. Right now, we're just looking for an entry. So great. That was a pretty interesting analysis there, eh? Uh-oh. So then let's go ahead and look some more into what we potentially see here. Wow, this lag is pretty crazy, y'all. It's absurd. So if we're looking at price right now, let's go ahead and erase these drawings. Uh-oh. All right, so we see price coming into this zone here, and we're actually starting to see some really good bearish divergences here, right? So we see this, and maybe we'll even start to interpret this as, okay, well, it's a buying climax. We see the first anchor. Now we're looking for the finish of the Wyckoff, right? We have the up thrust, right? Boom. UTAD, right? Sign of weakness, breakdown, right? So we could actually have said, okay, well, we see this coming, momentum coming down, price coming up. So then you might ask, well, do you take this first trigger or do you take this second and third trigger? That's a very good question. So after you see this several times, you're like, okay, well, we probably don't take this first trigger to UTAD. We actually do want to see this first break. But that should be slightly convincing enough to say, okay, well, when we see it pull back into here, let's go ahead and take that play there. Which, again, it could be quite daunting, right? Because then you're saying on the 1 minute, well, yeah, now we have definitive proof that maybe it wants to come down because you see this large candle moving down, right? Moving down. And then you see it breaking back up. So then now you're saying, okay, well, this is our zone here. and maybe we should go ahead and start looking towards lower time frames to take an entry. So at that point, you see, okay, well, maybe it's logical to do that. So maybe that's how you start to filter it out. You know, you let these first plays happen, and then you see the sign of weakness in Wyckoff, and then using other confirmations. But the only thing about this indicator is it really lags. Look at this. You see this, y'all? Look how that's moving. I was trying to do it sporadic. But anyways, that's pretty much my analysis on GJ, or my review of what actually went down, which ultimately we didn't get involved in. And now we're looking at the good old Bitcoin. Bitcoin's at $20,712 currently. The current time is 5:51 MST AM, right? So remember, we had that rollback on the clock in the Americas. So let's see, break up, break down. So we didn't actually mark anything out on Friday here, so we're not going to look at this. Let's look at Apple real quick. See what Apple did. Yeah. So here's our. Oh, this was Thursday actually, huh? No, this was Friday morning. No, it was Thursday. Interesting stuff. Yeah. Ultimately, we started coming down. Let's look at one of our other fan favorites. Looks like we're starting to. I think we come and liquidate the rest of this. We come a bit deeper, because you can see it's anchor, trigger, and also actually we did get a bullish divergence. So potentially, but you see money flow is just so deep into the red right now that I think this curls over. We come a little bit lower here on price for sure. Right, we have the start of a Wyckoff, but then we see one more liquidation here. Then we see a sign of strength, and then we want to see a retest of where this is going to be. So what I'm talking about is, right, maybe we see some pullback come into here to liquidate, and then maybe we even see it come a little bit lower, and then we want to see some sign of strength, right? And then we want to see it maybe play around like that and then come up. So we ultimately would want to see something like this. We want to take like that, right, to go higher. That's the ideal, right? And this is just the review, right? This is what we want to see. I mean, we just see it's just so much blood in the water right now. It's pretty hard to believe that this is the move that's going to send us to the moon. So anyways, y'all, this has been 22 minutes worth of discussion. I hope you enjoyed the reviews. Go ahead and leave a comment, hit that like button, and of course, hit the subscribe button to continue with me on my journey to becoming consistently profitable. Thanks for watching. Y'all have a wonderful day. Peace.